Welcome back to the Tastyworks tutorial series. In today's video, we're going to be going through the entire process of how to buy and sell options on the Tastyworks mobile app. Now, to make sure you guys get the hang of it, we are going to use a bunch of different examples, both with long options, short options, and I'll even touch on how to do spreads in here, but I am going to save a more in-depth video on spreads for a later tutorial. But before I actually jump into the tutorial, if you guys are already planning on opening a Tastyworks account already and want to help me out a little bit, please use my link down below to open a new account. Apparently, if I get 750 you guys to sign up, I get myself a Tesla, so I'm really pushing for that. Now, jumping back into the tutorial, let's go over how to buy long options first. So buying calls and buying puts. First off, we need to actually bring up an option chain. So let's say we wanted to trade the Apple options. On my left-hand side, you can see I already have Apple in my watch list, so I could simply click on that. Once I do that, I could click on the little Trade Apple button in the lower right-hand corner. It looks like a big green button. As soon as I do that, it brings up a few different options. In our case, we are going to click on the one that says option, so we can bring up the option chain for Apple. From there, we can see all of the available expirations for Apple. So on the left-hand side here, you can see the expiration date, like January 21st, January 28th, February 4th, February 11th, February 18th, and many, many more. Just to the right of that, in the center column, it gives you the number of days until expiration. So for example, January 21st is 1 day from today, January 28th is 8 days from today, and so on. You can see the rest down below. And then on the very right-hand side, you can see the implied volatility for that expiration. So January 21st, which expires in 1 day, has an implied volatility of 37.1%. And to the right of that, the implied move is going to be in parentheses. So the implied move right now is $1.68 up or down. You'll also notice a little purple line on the option chain and it says E on the left-hand side. That stands for the earnings announcement, which in this case for Apple is going to be on January 27th. Now that we got that out of the way, let's go ahead and open up one of these expirations. So let's say we wanted to trade the February 18th expiration, which is 29 days from now. We'll simply go ahead and click on it to open it up. As soon as I do that, you can see it opens up the option chain, and by default, it puts us right at the money. And we can tell we're right at the money pretty easily because of that orange line going right down the center, dividing our in-the-money options versus our out-of-the-money options. You'll also notice that there's kind of like an orange shading next to some of those strikes, like from the 160 to the 175. That's actually the implied move. So for February 18th, if we look back up in the upper right-hand corner, we can see the implied move right now is $9.69, and that's what that orange bar encompasses. $9.71 to the upside, $9.71 to the downside. You'll also notice blue horizontal lines, which right next to it say 1 SD in this case, which stands for 1 standard deviation. If we scroll up, we could also see the 2 standard deviation move. If we scroll down, we can see the 2 standard deviation move to the upside as well. And then finally, at the very top, we can also see the columns of information, basically what each one of these numbers represents. So first off, we can see the bid and the ask for the calls, as well as the bid and ask for the puts. And I don't know if I mentioned it before, but the calls are on the left-hand side, the puts are on the right-hand side. And hopefully it's pretty apparent, but the strike prices are listed right down the middle in that black column. Now, in this platform, whenever you want to buy an option, you simply click on the asking price. Whenever you want to sell an option, you click on the bid price. So in this first example, we're going to go over buying just a single leg call option. So betting on Apple, in this case, going up in value. So let's say we were looking at buying the 175 calls. If I look on the left-hand side, I can see it's currently going for 294 by 297 in this case. If I wanted to buy that option, we're simply going to click on the asking price, which is changing right now, but it's 298. We're going to go ahead and click on that. As soon as I do, you can see it gets highlighted in green, so we know exactly which option we're about to buy. And then down below, we see the order ticket for that options contract. For me, Tastyworks doesn't have the most simple layout, but looking left to right, we can see we're about to buy one contract of the February 18th 175 calls, and the limit price is currently $2.99, now $3. If we wanted to change some of those things, like first off, let's say we only wanted to pay $2.90 for this contract, we'll simply hit the little minus button until we get down to $2.90. And now we've set the limit at $2.90. Let's also say we wanted to buy 2 contracts instead of just 1 contract. We're going to go ahead and click on the More button on the left-hand side. Looks like 3 little dots. From there, you'll see the little menu pops up, and we're going to look for the quantity box and just hit the little up arrow to bump it up from 1 contract to 2 contracts. You'll also notice that you could change like the expiration date, the price, the strike that you're using. But really, the only things you're really going to mess with on the More button is the type of order you're using. So in this case, we're using a limit order. And then the time in force box down at the bottom. So let's also say we wanted to change the time in force from a day order to a good until cancel order. We'll go ahead and click on TIF there. And then once this little menu pops up, we're going to click on GTC down at the bottom. So now what we're essentially saying is we want to buy 2 contracts of the February 18th 175 calls. We only want to buy it if it goes down to $2.90 a contract, and we want this order good until canceled. If we wanted to actually place this, we would simply hit review and send in the lower right hand corner. We're going to make sure everything looks right in this case. We're about to buy 2 contracts at $2.90 each. It's going to cost us a total of $5.80. And you'll notice up at the top, I do not have enough buying power for this. It says warning, account does not have enough BP. So we're not going to actually place this, but this is what it would look like. Since we're not actually going to place this trade, I'm going to go ahead and click on that little trash can icon that says clear. And we'll say yes, continue with clearing the order. Now that was simply buying a call option. So let's say then this next one we want to buy a put option because we want to bet on Apple going down in value. So let's say we scroll up a little bit and we were looking at the 150 puts, which are currently trading for $1.19 by $1.20. Again, if you want to buy an option, you simply need to click on the asking price, which in this case is $1.20. From there, just like before, it gets highlighted in green because we're buying this put option, betting on Apple going down. Down below, just like before, we can see the order ticket to buy 1 contract of the February 18th 150 puts for $1.20 or better. I will also mention, if you kind of move your finger down here and kind of scroll it down, you'll also see some other info about that option. This is going to be a little bit more like what the desktop version of Tastyworks gives you. It tells you the overall delta for this trade, the probability of profit, the BP effect, the overall theta for this trade, and then the probability of getting 50% on this position as well. We're not going to dive too deep into what each one of these numbers represents, but the delta tells you the overall bias for your position. So right now we've got a -12 delta, which means as of right now, if we bought this contract, Apple went down $1, this contract would increase by roughly $12.73. So basically it's just telling us as of right now, we've got a bearish bias, which should hopefully be obvious to you if you're about to buy a put option. Right below that, we can see the overall theta for this position, which right now is $6.19, and theta is time decay. How much is this option decreasing in value every day that passes? As of right now, this options contract is going to lose us about $6.19 a day due to time decay, and that's if the stock doesn't move in our favor. Just to the right of that, we can see the probability of profit, which right now is 12%. That's the probability that we'll at least be able to make 1 penny on this transaction. So as of right now, there is a 12% chance that I'll be able to sell this for $1.25 if I bought it for $1.24. Just to the right of that is our BP effect. So how much buying power is this going to tie up? Right now it's saying about $120. Right below that is EXT, which stands for extrinsic value, and right now there is $124 of extrinsic value that will come out of this contract between now and expiration. To the right of that is max P, which stands for max profit. Theoretically, if Apple were to go down to $0, we could make $14,876 on this trade, whereas the max L or max loss is only $125, whatever we paid for this contract. Again, if I wanted to change anything, I could scroll this back up and edit the order ticket, adjust the number of contracts, the price I'm paying, all that stuff. And then when I'm happy, I would simply hit review and send, make sure everything looks right, and submit the order ticket. Now again, since I don't actually want to place this, we're going to go ahead and hit clear and hit yes, continue to clear that order ticket out of there. And now that we got buying options out of the way, so buying long calls, buying long puts, let's go over how to short options in here. Now, I've already used Apple enough as an example. Let's go back to the watch list and let's use Disney as an example. So we're going to go ahead and click on Disney. From there, I'm going to click on Trade Disney in the lower right-hand corner, and I'm going to click on Options. Just like before, I can now see all of the options expirations for Disney, and I can see they're about to announce earnings on February 9th. So let's say I want to sell some options, and let's actually use the same expiration date, February 18th. Once I open that up, I can now see all of the available strikes down the center. I can see the calls on the left, the puts on the right. And for this first example, I am slightly bullish on Disney. At least I think Disney is going to be above 135 on February 18th. So I want to sell a put option. Looking at the 135 strike put, I can see it's currently trading for 84 cents by 89 cents. And since I want to sell this put option, I'm going to click on the bid price, 85 cents right now. As soon as I click on it, you can see it gets highlighted in red this time because it's telling us we are selling this option. Down below is an order ticket just like before. We're selling one of the February 18th 135 puts, and we're trying to do so for a credit of 85 cents or better. If I wanted to change that, again, I would simply click on what I want to change. Maybe I want to try and get 90 cents instead of 85 cents, so I could go ahead and bump this up. And maybe I want to do 2 of these instead of just 1, so I can click on the More button and bump up the quantity from -1 to, let's say, -2. And now if I want to look at the overall Greeks for this portfolio or this options trade, I can go ahead and scroll down here and see my overall delta on this trade is $23.55, which means I'm slightly bullish on this trade. If Disney were to go up $1 after I put this position on, I'd make $23.55. Right below that, I can see my overall theta is a positive number, which means I'm now benefiting from time decay. I'm going to make about $9.33 with every day that passes. And looking to the right, I can see my probability of profit on this trade is 89%, so the probability of me making money on this trade is very good. The BP effect is $2,900, so that's how much buying power I'm going to tie up for doing this transaction. And to the right of that, I can see my max profit on this transaction is $180, the credit that I receive, so I'm receiving $90 per contract. I'm doing 2 contracts. I can make $180 on this trade. Now the max loss right below that, if things go completely against me, Disney goes completely bankrupt, goes to $0 a share, I could lose $26,820 on this trade. And remember, that's because I'm telling someone they have the right to sell me 200 shares of Disney at $135 between now and February 18th. So even if Disney were to go to 0, they have the right to sell it to me at $135. Now, if I actually wanted to place this, again, we'd scroll up a little bit and hit the review and send button, make sure everything looks right. The order ticket is listing out exactly what we want to do. We're putting in a limit order at 90 cents. We're pulling in $180 in credit, and we can see our max loss and max profit just like before. If we wanted to submit it, we would hit submit in the lower right. Since we don't want to do that, we're going to go ahead and hit the clear button and hit yes and continue. Now the short call is going to be the exact same way. We're going to find a call option that we want to sell. So let's say we were looking at the 165 calls, and to the left of that, we can see they're currently trading for 90 cents by 93 cents. Since we want to sell this call option, we're going to click on the bid price of 90 cents. It's going to highlight it in red just like before because we're selling this contract. Right now it's doing so for a limit price of 90 cents, so we're going to do so for a 90-cent credit, which means that's the absolute most amount of money we could make on this trade is $90. Now, if I were to scroll down on this order ticket, you're going to see the max loss is infinite. And right there, you can see it in the lower right, max L or max loss is infinite. We could theoretically lose an unlimited amount of money on this transaction. And remember, that's because theoretically, there's no upper end threshold for Disney. Disney could go up to 200, 300, 500, 1,000. Now, that's not really realistic. It's more like the risk is undefined. We don't know how much money we could lose. But definitely be very careful if you're going to get into naked option selling, especially naked call selling, because you can definitely get yourself into a lot of trouble if you're not being careful. Now, we already talked about it before. If we want to send this, we would just scroll up on that order ticket, hit review and send, make sure everything looks right, and submit the order. But the last thing we're going to go over, if we clear this out, is how to quickly do a spread in here. And I'm just going to do one quick example because I'm going to save this for another video. So let's say we wanted to put on a short vertical put spread. We wanted to sell the 140 by 130 put spread on Disney. All we have to do is sell the option we want to sell, buy the option we want to buy. So in this case, we wanted to sell the 140 put, so we're going to go ahead and click on the bid of the 140, $1.50 here. You're going to notice that it highlights it in red, which is exactly what we want to do. We want to sell that 140 put. Next up, we want to buy the 130 put to create the vertical put spread. So we're going to look up at the 130 strike and see it's trading for 51 cents by 54 cents. And since we want to buy this one, we're going to click on the asking price. Now you'll notice that they're both highlighted. The one that we're selling is in red, the one that we're buying is in green, and then down below we can see the order ticket built out to create this vertical put spread. You'll see we're selling the 140 put while simultaneously buying the 130 put, and we're doing so for a net credit of $1, which means the absolute most we could ever make on this transaction is $100. And if I scroll down, you'll notice that the max loss is going to be $900. And you can see it right there on the right. Max profit 100, max loss 900. Now, if you actually wanted to send this, we would hit review and send, and it'll tell you right up at the very top that this is exactly what we're about to do, is sell one Disney put vertical. Now, like I said, I'm not going to spend too much time on creating spreads in this video. I'm going to save this one for a completely separate video so we can go more in depth on it because there's a lot to get into. But this is how you trade options in the Tastyworks mobile app. Now, I know I went through that quick and I probably didn't get to everything, so if you guys do have any additional questions, please let me know down below. Also, like I already mentioned, if you guys are already planning on opening a Tastyworks account and want to help me out a little bit, please use my link down below. But we'll go ahead and end the video here. I hope you guys all have an amazing rest of your week, and I'll see you all on the next video.